Central Expressway. So hopefully you guys made it through the mess. Appreciate it. So we have a lot to cover, so I'll try to be quick. And Barbara is going to present CFPB changes, how that affects the lending side. Nancy Carroll will be going to present on the title side, how that affects your expectations, setting the expectations for your sellers and setting expectations for your buyers. So first, let's go through our top producers, and Erica, do you want to kick us off?
Sure. Good morning. I am happy to announce that our top producer for this month is Tammy Bennett. She's out of town today. So
She's in Orlando.
Give her award.
Celebrating.
And no surprise, our top listing agent is Wes. Again, good for him. And I'm very proud to announce Angela Cristini is our agent of the month.
All right. So I also want to give kudos to Angela. She's really taken to heart a lot of the Waller Group training, the Cornerstone training that is so important, and she's now seeing the profitability and benefits of it. So that's great.
I did want to mention that if you don't have an open house to hold open every week, please do call and ask me, and I'll try to find an open house for you to host. And we do have the signs ready and available, so I'm really looking forward to you all hosting those open houses. And also, I haven't seen a lot of agents come and ask me for stationery. I know Venus really likes the stationery. She's been using that often, and so you may want to ask her thoughts on stationery, but I do have that readily available for you as well. So please do come and chat with me about that. And if you're not using your buyer's guide and your seller's guide, get with Jeremy and I, and we're happy to help you make some edits on that or give you some tips on how to utilize that buyer's and seller's guide to the max, okay? That's so important for your appointments. And professional photography, if you have not had a headshot done yet, or you're looking to update your headshot, get with me and we can make arrangements for that as well, okay? There is a lot of new faces around the office, so please do help your fellow agents. If you have any questions or if you see someone around that you don't notice, please introduce yourself. This is actually one of our newer agents, and she just came on board, and so please do welcome her. Property management, just a reminder that you do get a referral fee, 25% when we sign that property over, and then 25% when you renew with us. If you have not used our notary services, please get with me. I know Claudia's used them before, Wes has used them, and it really saves you a lot of time. You want to make sure that your transactions are smooth and convenient as possible. So I can't stress enough how important it is to use our vendors and how that those relationships will really help your business as well. We do have the title partner in with us now here in the office, and I'm sure Logan will speak more about that. And then Barbara, she's always happy to help with mortgage and any mortgage questions or anything. And of course, I'm here, Richard, Logan, so come and see us if you have any questions, okay? And that's all I have today.
All right.
Thank you.
Thank you, Erica. So as far as our monthly market update, I want to dovetail a little bit on the monthly market update along with, I'm going to present part of the buyer tip sheet and dialogues with the market update, and then later on after the presentation from Barbara, because that will affect how you buy your offers. But the sales, you probably saw my Facebook update as far as the March sales. It is a record-breaking month as far as the sales statistics and the appreciation for that month. So, we've seen appreciation in some of these markets between 6% to 18%. And then the month's absorption or inventory, March was it was just a record-breaker month. There's nothing that I've seen in my entire career that's compared to it. So what does that mean for buyers and sellers that are in the market? That's where setting their expectation is so important, and it's local, hyper-local, based on their community, their area. So make sure you're practicing on your dialogues. That is what will generate you more transactions over the summer and through the fall, is being able to forecast the market, let them know where the market's going based on history. So, March gives us a really good indicator of where it's going, and with so little inventory and pending sales being higher, pending sales aren't higher all through the Metroplex. There's some communities and submarkets that pending sales are down. then there's other areas where pending sales are up. So that pending sales is a leading indicator, and it's your job as a professional to let your buyers and sellers, your leads, know what those leading indicators are and how that affects their decisions. And the price range that they're looking in is where, and I'll talk a little bit more about that when we go into the offer tip sheet on your buyer counseling session, even working with your sellers, because knowing the market in their local area and also knowing where the market is going and knowing where it's going based on the price range. Those are the three things that you really want to know the most. You know, where is my market moving in my local, in my area? What's changed in the last year, and where is it going? So what's happened and where is it going in that local area? So to make sure that when you're talking to any at a cocktail party or a potential seller lead or buyer lead, that those are the three things that you're keeping top of mind, and that you know. That's market knowledge that you need to know. Okay, marketing and technology updates. Erica, you want to touch base with us on that?
Sure. I know that we've streamlined the marketing as far as your flyers and the postcards and all of that. If you have not had a chance to get with Jeremy on eCampaign Pro, that's also a really good tool to use. As far as back agent goes, I know we've all had to go to back agent to submit our CDRs to title. However, there's so many good tools. If you go under documents in back agent, you'll find all the checklists that we've entered in there, as well as a sign form if you want to order signs, and there's a lot of great information there. So when you get a chance, if you have some downtime, please do visit the back agent and look at all the good forms that are there to help your business. Okay.
All right.
All right.
Richard.
I don't want to take much time because I know this Barbara and Nancy have some good material, but I just wanted to touch on a couple of things quickly and just remind you guys that if you've been an agent for a while and you don't feel like you're hitting the numbers that you should be, we strongly suggest you go back and start with our ramp-up training weeks 1 through 4. They're out there in back agent. It's really easy. We have a good checklist of the recommended steps that you take by day and by week. And if you're in week 1, all the training modules are out there for that particular week, so they're really easy to find. So take advantage of that, or call me and let me help you find those and get you started and get you back on track. Erica just was talking about back agent. We want to remind you again how important it is to get your listings and your offers into the back agent as soon as possible. Don't wait until it goes under contract, or say, well, I'm not going to put it out there because it might fall out in option. You still need to maintain your files in case some type of legal action is brought against you and the brokerage. We need to be able to access those files so that we'll have a line of defense and we can provide that to our E&O carrier. So it's really, really important that you get those out there just as soon as you can after you get a listing, you get a buyer, or you have a listing and it goes under contract. Don't wait, please don't wait till it goes pending. We need to have that information. And then also that gives Kimberly the ability to go out and contact the buyers and recommend that they see Barbara for a second opinion. If they've already ordered the appraisal, then they're probably not going to want to do that. They will have no real motivating factor to do that. So please, please, please. And unfortunately, we're going to have to start monitoring these a little closer. And if the policy requires you to get the paperwork in within 24 hours, so we really want you to take just a little time and a little effort.
And the fine for that, for not submitting it with the time frame, is pretty steep. It's $250 fine. And we've been pretty lax in the past, but we've seen to where these timelines, some of these contracts are coming in right before closing. So that really, it hurts everyone, especially with these new changes. That could be a problem. Yeah. So the fines will be enforced more than they have been in the past on that.
Okay. All right. Thanks, guys.
All right. Okay, Barbara, you want to get us started?
We're going to hand these out.
You start talking.
All right, I'll start talking.
Yeah.
Okay, what's in your folders is actually, it's a slideshow presentation, and I've broken it out. On the left-hand side is actually what affects us as a lender, but it'll have the estimate sheets in there it's going to show you. On the right-hand side, it's going to talk about timelines and how it affects the realtor. And so right now we're in like 30-day closes and everybody's wanting to get a house really quick. When this kicks into effect in August, your 30-day close is going to be in jeopardy. You're going to be looking at more like a 45-day close. If everything goes perfectly, it's even going to be tight on a 30-day close. The new forms are totally different than what you're going to see now on the HUD-1 settlement statement. And the estimated cost sheet that's going to go out to the borrowers is, what the forms are in there for you guys to look at, is very simple. They want, the new thing with the CFPB is that they want people to shop for mortgages, which is great and awesome. But if the borrower gets their credit report pulled 6 times, their credit scores are going to drop. So realistically, this is not going to happen that much, but they may go shop some services. They need to do that all up front really, really quick before you start writing offers. Because once you get an offer in place, as a lender, if I have 6 items, and those items include that property address, I'm required to disclose to the client. Once I disclose to the client, our time clock starts. This is on my end, and my end is going to affect the title company also in getting the forms all through the system and the loan approved. If the client decides in the middle of the road that they want to change a service provider in here and our numbers change, I have to redisclose that information. So every time you redisclose, it's 3 days. You get the information, and then it's 3 days before you can do anything. We're on that timeline now. Like I have a loan closing that's closing this Friday. They made a change. I had to redisclose yesterday, or I'm not going to close her on Friday. So the 3-day rule is basically you give it to them on Monday, and they can close on Thursday. But the redisclosures that I have to do, you give it to them on Monday and I can close on Friday. So they haven't meshed the timelines together, but it's going to be better for the client because they're going to be able to understand the numbers a whole lot better. In the old format that we have now, recording fees have been a big deal because once I disclose that good faith estimate to them and I've got an estimated recording fees on there, and my recording fees are lower than what actually happens with the title company, the client can't pay for those. Now those are going to be exempt from the settlement statement. I guess we can still call it a settlement statement. But it's going to be really, really simple. But timelines are really, really important. So the answer to the big question is, are we going to be able to close on time? When you write that contract and you have a 10-day option period in there, and you want to wait till the 10th day to do that inspection, you're not going to close on time. If I can't order the appraisal almost within 3 days after you write that contract, we're not going to close on time. Because the appraisal also has disclosure periods in it. And the appraisers are running 7 to 10 days. And we're not counting weekends. So the big hoo-ha in all this is that the 30-day close is going to be really, really tight to accomplish. So you're going to be looking at more of a 45-day close. And it's going to be critical that you have your clients pre-approved, not pre-qualified. And pre-approved is they've given me, or whoever their lender is, all their information that you know that they can close. We've got everything done. I do that now with the clients. You need to call your insurance agent as soon as you have a house and get a quote on that house. So that that's in place, because that is a drag on us, trying to get that insurance and get the insurance companies to respond and get that in, because we have to disclose that information to them. Plus we have to have that at closing. So there's lots of cogs in the wheel, and we just need everybody to do everything on time and do their best. And you laugh, and that's the truth. And it's like, you know, some of them don't. But if they're going to be in business and a lot of business, you're going to have to do all your stuff on time. Your inspection.
Conventional and FHA?
Conventional, FHA, VA. Everything is, I mean, like walking back to a signature loan, it's not the same. But anything that's got a title policy against it, that you're gonna have to get title on, you're gonna have to go through all this. The CFPB has changed a ton of things. It's simplifying is the way they put it. And the forms, it's gonna take longer because of the disclosure periods. Because once we're done, let's say we're done and we're approved and documents go to the title company on Friday. Monday, that disclosure has to go out from the title company for them to close on Thursday. Okay? So there's no getting documents this morning and closing them this afternoon or tomorrow or the next day. It's on the 4th day.
So the biggest change in all this is really just a 3-day timeline, 3-day disclosure.
The forms are totally different too.
But as far as timeline, because I want to make sure.
Timelines, you're adding a week to your deal is what it basically means. 5 days.
All right.
Right?
And this is effective when?
August 1st.
All right. Thank you. Nancy.
Samples of the forms, I don't know if those are in your packet.
Yes,
maybe.
I do.
Okay.
For you that have, for anyone that has not met Nancy, Nancy is the attorney for Texas Title, and Linda, has been, we're fortunate enough that she has put Linda in our office, and Linda has done a fantastic job this month and is a very seasoned, excellent closer. So giving us a full, finally one-stop shop. So with that being said, Nancy, sorry to interrupt.
Well, and I would say, just as an introduction for Linda, I think that's going to be a big component in this, what we're talking about today, because of the timeline. So having her here to be able to be dedicated just to these particular closings and dealing directly with your preferred lenders, I think is really going to help those timelines a lot. We are going to be putting in place, as the title company, we are affected by this substantially, but it's a flow down from the lender who is really going to be the one who's going to be affected by this. One of the things we are working at putting in place now is something called Onsite closing, which Bank of America and Wells Fargo have already blessed as one of the platforms and portals for the lender and title company to use to communicate and drive information. And like you were saying earlier, the sooner we have information, the more prepared we're going to be. So throwing things together at the last minute, it's not going to be an option anymore. But this will give us a portal, something for us to be able to trade that information, almost like a drop box for all the parties to come together. But the nice thing is, because it's been approved the way it's been approved, it also meets those best practices rules. So now we've got this sensitive information. We've now, by using this platform, have already, it's been established that that meets the best practices rules for the exchange of privacy and delicate information that has, the clients, maybe their social or their insurance information on it. So that's going to be one thing I'm sure you guys would.
No, everybody has that now.
Yeah,
yes.
It's going to be.
And as realtors, you should have that.
You're going to want to have access as well, and we'll come in, and we haven't really run through it yet, but when we do, we'll come in and we'll do some training on that as well, show you how to use it. We can all kind of show what our roles are in something like that and how we can help each other. Amendments, getting amendments over, you're going to want to be putting those all in a place that shows that everybody received it. Title company, lender, because a lot of times we'll get, well, we thought we sent it over to so-and-so, or, and we find out last minute. If we're uploading all these things to a place that everybody can get to it, it's going to eliminate a lot of those problems, or the hope is this. There's not going to be changes at the closing table, just like you said. You change something at the closing table that's even minute, you're not closing, you're starting over. So it's going to be critical that we have all the right information beforehand. We are considering, and I don't know what it's going to look like yet, but we are considering doing 2 schedulings when it comes time to closing. We're getting the documents 3 days before. The first scheduling would be with the realtors and the lender, a telephone conference, 5-10 minutes, where we can run through everything and say, oh, we didn't get that amendment, or hey, we didn't know. So that way, if we do that together, 15-20 minutes, instead of when we get down the road, we're not going to have all this confusion on day 3 when we want to get it closed and funded.
Well, like for us, we've already got that set up that on that transaction, as soon as that loan becomes a loan, the realtor's on it, the listing agent's on it, the buyer's agent's on it, title company, everybody's on it. So everybody's getting an update. You're going to get an automatic email throughout the entire process. And you're gonna know when things are happening, when it's approved. There's not gonna be any phone calls because there's not, I mean, we make phone calls, but you're just gonna automatically get that information.
But on the third day, when we get the closing packet, because we're gonna have to get that out day 3 before the closing,
Yes.
kind of getting together and making sure, hey, I didn't know, we changed the concessions. We didn't get the amendment for that, or we changed the price. Those kind of things, we want to nail that before so we can get it fixed or changed without having to do something at the closing table that's going to cause us to extend, because nobody's going to be happy with that.
August is probably gonna be an adventure for
It's going to be an
all
adventure for
sides.
everybody. Absolutely. I agree.
Busiest month, new rules.
I think ultimately it will be a good thing. I think, like you said before, it does truly give the customer a better format for information. The problem is the whole system's got to change around that format to make it work. And I will say this form that you have here is also going to change. This form was created by the CFPB for what are called ALTA states. There's about 34 of them. Texas is not an ALTA state. So the TDI is coming in and they're working with the CFPB to make their own changes to this because it's got to be Texas specific. So this is not your final form. It is for other states, not for Texas. So this is a guide. Just know that it's going to change a little bit. One of the biggest things that Texas has a problem with is, if you'll notice, there's no place for the seller to sign at all.
No, there's no place on a good bank estimate for a seller to sign either.
Well, but this is our closing document.
Oh, I know.
And this is what we issue title policies off of. And the way the state of Texas works is we have to have this in our policy package. And it has to have both parties' signatures. We don't have a closing document right now for both parties to sign. So it's going to have to be modified for Texas. We're not sure how significant the modifications will be, but there will be a Texas-specific integrated disclosure form because we're not an ALTA state. We're one of the few that just don't fall under what's called the American Land Title Association. And so we do things a little bit differently in Texas. So that form will be coming out, they expect, within the next month to a month and a half. So we'll be able to take a look at that and
So
see how
what would
that's
help
going.
us more than anything, I think, is a clear flow chart on ideal timelines for insurance, for example. When will the insurance, when is the drop dead date on, they have to decide on the insurance on this date. The appraisal has to be back on this date before we can, and I know these change with different lenders, but if you have a flow chart and you have a flow chart with these drop dead dates and ideal dates, and we have something to shoot for, but we also know to expect to let the client know up front if it's not done by
And
the
I
date.
haven't been in Insight yet, closing Insight. I haven't gotten into it. I've registered, but I haven't gone in and played with it. I think we can structure together, like you were saying, deadline emails, saying, look, hey, everybody, you've got this many more days to get this in. So in addition to the flow chart, having little tickler emails that go out that remind everybody that this is coming up, we need to go ahead and nail this down and make sure your clients know that once you hit that date, to nail it down, if you decide to go shopping for something different, it could very well affect the date of their closing.
Would it be something similar to what Equator does?
Similar. That's a perfect example.
You got 3 days, you
Yep.
got 3 days, and that means you do the rest of the
Yep.
day, your whole transaction is dead.
I mean, not necessarily dead.
Sorry.
It's not kill anybody yet.
At another point.
Yeah, that's exactly right. And so a tickler email that says, and it's really got that structure in it. That's the idea, is to make it practical and put these rules into a format that it will remind everybody and keep everybody on point. But I've got to play with it a little bit in order to know exactly how it's going to work and how much we're going to have. Are we going to need to add to it? Are we going to need to supplement with our own flow charts and things of that nature? So
Yeah, homeowners insurance is a big deal.
it's going to be huge.
Would you guys still send out, whatever you're calling this, the whole HUD one to the agents for them?
This will go out for everybody to review, but it's not going to, there's going to be no HUD. The HUD doesn't exist at all.
But we will get the disclosure.
Yeah, everybody's got to have the disclosure 3 days before. So it's a must.
The agents are.
And see, the beauty of this system, and they're vetting it still, is it's got some of the solutions inside of it to meet the requirements. So one of the requirements for the title company is going to be, we have to be able to show evidence that the 3 days were met, that there was disclosure. Well, the way Closing Insight works is it gives us the ability to timestamp what went out. So there's no question that we actually met that date and that we have the required backup to show that that disclosure was made timely. We have to do that now with refinances, but it's a little bit less. It's a little bit more lax as long as we can show an email. Typically, we can still get it funded, but this system is going to provide some of that stuff for us. It's going to help.
Will the buyer be able to choose to waive the 3 days?
No,
It's not a choice. Again, it's not a choice.
it's like a refinance. You can't do it except on a refinance. If they got it on Monday, they couldn't close until Friday. Now they can close Thursday.
Yeah, and the dates are going to be a little bit, timelines, but it's not going to be something that you can just choose not to.
What
not to worry
about fees that are on or off that disclosure? So for example, we would put, lease back or deposits, or we would have put that on the settlement statement. Now with no settlement statement, are we not going to?
There's
be
still
able to
places for
prepare
it.
invoices and to put contractors?
There's still places to put those things. It's just going to be a completely different format.
So if the contractor doesn't get his invoices until 2 days before closing and we want it on there, then it has to be redisclosed completely.
That's why it's going to be really important to make sure that you nail everything down early, right? And that's why it's also going to be important that you really use that system to make sure that things get put in there. Because if they're in there and then everybody's got access to them, it makes it a whole lot easier than if we're hunting through emails and I thought I
When
sent
will
it,
that
but I
system
didn't.
be available to use?
Well, they've already got us to where we can all register for it. What I have done is I've contacted a company, it's called Morph Media, and they have coupled with Fidelity Underwriter nationwide. And they're going from state to state, and they're doing these seminars where they're actually teaching you how to use Closing Insight and how to use it with a title company, and they're doing training classes. And so I've contacted them. They won't be able to do anything or schedule anything in Texas until we have our final Texas form, but they will come out, and the plan is for them to come out. We're going to have them come out like 5 or 6 times and have different training classes where you can just go in and actually see how do you put stuff in there, how's it going to feel, what are the deadlines going to be. And they're supposed to be amazing, so we're hoping that we can get them slated to come out and do a full realtor training.
That's very informative. We appreciate you presenting this.
And it's just going to be everybody working together. I mean,
Yeah.
So since Nancy's here, our house attorney, do you have any other legal questions? Because this is a great opportunity to ask her and to use her background and experience on common scenarios that happen, which one that I have as a result of the market, sellers trying to get out of contracts. When they are the buyer, their loan approval's not in, or they're looking for ways out of these contracts. How are they getting out of contracts? When we're representing these sellers, how can we make sure that we're representing them properly? And same goes on the buyer side to make sure our buyers are being represented legally.
it's a lot harder for a seller to get out of the contract, obviously, than a buyer. I mean, if you look at the contract and you know the contract pretty well, there's very few provisions within the contract that let the seller get out. You've got their buyer provisions. If you've got an HOA, of course, that can be a huge problem because if it's never delivered, then the buyer has the right to cancel all the way up to the date of the closing. And if certain title objections are made, they don't like things that are outside the promulgated objections, buyer can get out of the closing. The seller, it can be difficult. I mean, you want to make sure your buyer's delivering things on time. I mean, that's the biggest thing that we see. Earnest money just whenever we decide we're going to get it over there, option fees. I mean, those are all things that you really need to stay on, but that's always been the case, right? You're just going to want to make sure that when you've got sellers out there trying to wiggle out, that your buyers meet all the requirements that they need to
So
meet.
how are sellers getting out? Like, let's say the loan approval's not completed within the timeline, or let's say, because I'm going to talk about some of these things in the offer, writing the offers.
But in a lot of those scenarios, again, it's going to be the buyer still has the option to close. They've just lost their financing contingency, right? So it doesn't necessarily take them out of the closing.
So if they send an amendment in, because this is a question I get in. Okay, financing get done, if they send in an amendment, you want to extend the closing date, and the seller does not agree to that.
You
Is
go
that the
back to
seller's
your
out?
original contract. No, you go back to your original contract.
Okay,
See, and so a lot of people think that all of a sudden, well, there's been a counter on. No, you go back to the original contract is what
Okay.
happens. Then at that point, the buyer may say, hey, I can't do this anymore
Right.
because I can't do it without financing.
Right.
Of course, the seller can agree at that point to let them out. But it's not for the seller to force it to take the buyer out of the mix.
Okay,
The buyer they can still perform under the original and make it
but
happen.
if they can't,
If they can't, then they're in breach of contract. But they gotta breach it first. So the seller can't simply just say, hey, I'm moving on to another contract. And a lot of people think that, because we may have a closing date that's a week away. The buyer still has the opportunity, if they haven't come in and terminated, to try to perform on that date. And if they don't, then the seller has a breach scenario. They can say you breached, they can move on to another contract, they can release it, what have you.
So I've been involved in E&O claims and lawsuits. I had a situation just as recent as last week that relates exactly to this, where the buyer did not perform. And in one case, I represented the seller. This one last week, I represented the buyer. When I represented the seller, it resulted in a lawsuit. And the title attorney said, it looks like they're looking for a way out. They did not close on the closing date. We had a backup contract executed. We closed on the backup contract. And that buyer ended up suing us over it. And it was settled, but what,
I mean, you've got to get to the point where that buyer doesn't perform. Unless you have another out, which are very, very rare for the seller. Again, buyers tend to have a lot of outs. I mean, that's the way the contract is structured. But what we'll have them do in a buyer situation.
what's most common, and I think this is going to become a lot more common with this 3-day rule, to where, okay, we're now down to these timelines, and now the buyer can't perform, and we have to redisclose, and they're going to miss their closing date by 2 days, and we have a backup offer that's cash for another $50,000 sitting here.
So what we do in that scenario is we have the seller come in, sign the notary book, evidence that they performed. You still got your closing date. You got to make your closing date. Buyer doesn't make their closing date, they didn't perform. They're in default at that point, right? So at least we've got the seller that came in, they performed, we have evidence that the buyer performed, now we're outside of the closing date. At that point, you typically have the seller send an official termination. Look, we're holding you in default, we performed, you did not perform. You want to paper that up as much as possible. And then you need to have the conversation with the seller, the buyer, whoever it is that you're representing, before they sign that release of earnest money. And I'm sure you've all read it. It's not just a release of earnest money. It's a release of the contract. And people forget that. So we'll get parties that are just all mad as can be, and they'll come in and they'll sign the release of earnest money thinking they're going to go sue someone else after that. They've released all their damages under the contract. So you might not want that $3,000 that bad. You need to at least take enough time to weigh what your potential damages are. And I'm not saying that the liquidated damages and the earnest money may be sufficient, that's fine. But you need to educate them on that before they sign that, so they're aware they're not just signing a release of earnest money. They're signing a release of that contract and all defaults under that contract.
But make sure that can work for you or against you.
Yep.
So make sure you use that release properly, make it work for your clients.
Yeah, because you can still do a termination and tell them they're in default without signing the release. So you need, there's that document is pretty powerful, so you need to make sure that's truly what they want to do, that they want to give up all their rights to pursue any other damages, because I've had that.
No one wants to be involved in a lawsuit, so I suggest proceed and sign the release as soon as possible in any case.
Is there an easy way to get a lender to extend or delay foreclosure for 30 days? I have a contract that's going to close May 29th and the foreclosure date set for May 7th.
The buyer's lender or the foreclosing lender?
Well, the seller's, the owner's lender.
Is it a full pay contract? It's not a short sale.
No, they're going to get fully paid off. And I submitted the documents that they asked me to submit.
Typically, and this is not always the case, but typically, we have been able to get an extension if we can show proof of funds, a title commitment, a fully executed contract, a proposed HUD. Look, we're ready to go.
I sent that to them.
Oftentimes, they will come back to us. The first thing the foreclosure attorneys will say, we've got to get with the bank. And what I tell the sellers to do is call the bank every day once they have that packet and see if they'll give you an extension. And oftentimes, they'll give you an extension. That's the easy way. If they won't, then you're either going to get it closed, pull it together and get it closed, or you can look at temporary restraining order. Yeah, but you've got to remember, temporary restraining orders aren't given out that easily. I mean, that's thrown around all the time, but actually doing it, you've got to go in and show there's a basis for that temporary restraining order. Temporary restraining order only lasts 14 days and then it expires by law. And at that point, you have to have an injunction hearing. And then you've got to present evidence at that injunction hearing that the TRO should be extended into a permanent injunction. But the bigger issue is you got a buyer who's in foreclosure, a seller who's in foreclosure. That court is going to make them post a cash bond at the time you file for the injunction. And it's usually 2 to 3 months payments. And if they haven't been making their payments, that becomes an issue.
Maybe threatening some negative media exposure. You know, it's an older couple and they're sick. I mean,
Good luck. I mean, it's hard to get a sympathetic ear when you're dealing with Barrett Daffin and Wells Fargo. I mean, that's going to be difficult. Really, I mean, you need to pursue it from a look. This is a full pay. It's going to happen.
more flies with honey than vinegar.
It works a lot better.
And I don't really have any kind of stick to.
So we have limited time here, so we've got about 10 minutes. I want to go through, since Nancy and Barbara and Linda are here, I want to take this opportunity to just run through this offer tip sheet on, when you're recommending to buyers how to write an offer and you're setting their expectations, appropriate expectations to set. And there's so many changes coming up. I want to make sure that I'm in the right order making these recommendations to you guys. So what I want Nancy and Barbara and Linda to do is anything that you disagree with or any experiences you have had that would contradict this, let me know so we can use those as stories and to benefit our agents.
And we may need to modify it just based on as we start implementing more of this.
Okay. So keep in mind, this is when you're in a competitive situation or if you're expecting a multiple offer situation. And normally this would be a bit extreme, but if you are representing your buyer and you want their offer to be accepted, then these are things that I've done in the past, but I suggest get their offer accepted. So what is the maximum that the purchaser can pay for the property? So of course, in having proof or evidence that they can actually pay that. And then will buyer remove the option period? If not, what's the least amount of days the buyer will accept for an option period? So 2 days, 10-day option periods in a competitive situation is not really realistic. A 5-day, a 2-day option period is more realistic in a competitive offer situation. So make sure that that's the expectation that you're setting up front. The maximum down payment amount, because that option period dictates the loan approval period. It also dictates that closing date. So every day that property is not closed is a risk on that seller. So that's, if you're working for the seller, that's why you want to make sure that the firm contract is closing as soon as possible. Negotiate a lease back if you need more possession time, but it's price and how quick is it going to close.
Writing letters for the realtors to put with the approval letter that says, I have seen all their financial information, their credit scores are top tier, blah, 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 and those contracts are getting, can't say that. Then
I need to add that to this. That's a very good practice to add.
Does that 10-day, like that 10-day option period?
Right.
The way we're doing, I've already got pre-approval on it, and while that appraisal's out, I've got the approval that's already submitted on the borrower. I'm waiting on the appraisal to come in, so we're gonna have an approval on the appraisal within 10 to 15 days. And that's the only way we're gonna get them done on time.
Documentation and phone calls are powerful when they're combined and used together. So a letter and then following up with a phone call. And that goes for any negotiating practice.
Well, and just like with pre-approval, you get a listing, we'd rather open it if we can and take a look at it, because if there are things we're going to be chasing down,
Yes.
we don't want to have to be extending based on that,
Yes.
right? So we got to get, vesting issues corrected or.
Rose and Jessica situation on a deal right now, they've been working on months
Yeah, the
and
more-
months on it. And
The more we have that information, the better off we are. So.
I mean, I had one that was delayed 3 weeks because it was a death, it was an estate, and they didn't know it, and the title company told nobody. And there's 3 huge liens on this property that they have to settle.
Well, and a lot of times we get all the time. What do you mean I have to probate? It was my husband who left me a will.
Yes.
there's a process, you know, and so we want to know those things as soon as possible.
That's what
We got to be
Linda's-
correcting them
Linda's
over
here
here.
for us to make
Yeah.
sure that you guys are as prepared as possible on this. Some good feedback. Maximum down payment amount that the buyer can provide. So what, you know, if they're putting 20% down, but 50% down or 70% down is even better. So the more the better. That's one of the first things that a strong listing agent's going to look at. The maximum option fee that the buyer's willing to pay. You know, these are suggestions, $200 to $1,000 plus option fee. There's a property the other day, and another sales manager was telling me a $25,000 option fee. So these option fees are not uncommon for them to be high amounts when there's competitive situations. How many days does the buyer have to obtain loan approval? So this is key, and this depends on that option period. So if you have a 2-day option period, then you know your loan approval, having it in 21 days or 15 days may not be so unrealistic. But what are your thoughts on that? You know, what I put in this today, I changed this today. I made a few modifications, and I put 10 days from expiration of option period. So is that
Okay, that's, yeah. I
realistic?
mean, there's two letters. There's a conditional pre-approval and there's a qualification letter. You're not gonna get any contracts accepted with a qualification letter. And a qualification letter is somebody just pulled their credit. Letter, the lender should have looked at all their information, so this should not be a problem whatsoever. But if they haven't got anything.
But I think the appraisal is a bigger issue here because the appraisal is when I figure the appraisal takes 10 days. Yeah, so
Not counting weekends.
from the day that it's ordered until the day it's received. So they can't complete their underwriting and full loan approval until that appraisal is back and received. So,
Well, we have full credit approval. That's all that's asking for, isn't it?
Richard, Nancy, the contract specialist here. I mean, for the days that they're writing in for loan approval in that contract, I thought it's full loan approval.
Finance, credit.
It's finance, yeah. I'm getting full credit
I don't think
approval.
you're, the credit, you have to be approved based on credit.
Yeah.
We're talking about your contingency period.
Scores, yeah.
If the appraisal doesn't come in, that's something y'all have to deal with. But I've got, my guy's ready to go, I'm fully approved. Is that the question you're asking?
Well,
we talked
hold on,
about
if the-
Contract, but it's not approval of the line.
if the buyer isn't willing to pay the difference, do they still have an out if they're within that? That's what I think Logan is saying, right?
Both contracts, I believe,
What do you mean both contracts?
both the FHA, all the contracts, if it doesn't appraise,
Well,
it's an out,
That
right?
carries you back over to the front page.
on an FHA, yes. On a conventional, it could be how much down payment they put, because it still might meet your underwriting requirements.
Oh, sure.
Okay.
Right, and we've done that. We've adjusted down payment, so that the difference, like if they're paying 20% down, now my loan may be a 90% loan, and they're paying the other 10% to make up for the difference because it didn't appraise.
Okay.
And they can do that, but FHA,
But they don't have an out if they put a lot of down payment
That's,
and it doesn't appraise high enough in their minds. They can't-
right, I understand, but if you got a 95 and you bid, like I have one now that they bid 10,000 over, well, they gotta have that 10,000 in cash because the comps don't support it. Luckily, if it comes in, we're cool, but if it doesn't, they put in the contract that they waive that appraisal requirement. That they're buying the house, it doesn't matter.
Because the seller's agent said you're making a contract that's not going to appraise, so you need to take responsibility for that up front. We're not.
Well, right,
Can you
because they
send
all
us
looked
the
at the
language?
I
comps.
have addendums for it. I think I've given you one before that deals, I've got about 5 different addendums that you can use to contracts that deal with, this is what's gonna happen if it doesn't appraise, this is what's gonna, on the seller side, on the buyer side.
You guys need to really be careful what you're putting in special provisions.
Yeah.
As far as that appraisal, because you're not saying what happens if it doesn't. So there's no.
End period, there's no
Yeah.
kill it. I've had that happen before too.
So don't, just by saying it has to appraise,
Is it,
or what happens?
Yeah.
By not putting it in there, so you
It's
guys need
detailed,
to.
it says, the buyer is willing to go up to that appraisal amount if they are, to.
yeah, that's, I have, like I said, I have several of
Up
them.
to
that
5,000.
lay out.
Over, whatever.
If it doesn't reach this, this is what's gonna happen. If it does reach this, this is what's gonna happen. These are the options. They have the option to terminate. So it goes into all of those details.
So on the third party financing, can we just put the amount of the actual appraised amount, which would be lower than the actual, meaning the buyer's still gonna follow through. You know, the third party saying this contract is subject to this property being appraised at this amount, otherwise.
That's on the,
Buyer's not
that's just on the
obligated.
FHA.
That's just FHA? Okay.
So I'm still confused on number 5. How many days does the buyer have to obtain loan approval when we're writing that into our
But
contract?
that's not loan approval, that's credit approval.
Yeah.
That,
I need to change the verb.
So a pre-approval letter, not a pre-qualification letter, meets that requirement. The pre-approval letter says they've looked at their income, they've looked at credit, they've looked at the
No,
borrower.
this says loan approval. The concept, Lynn said, your question is loan approval, not pre-approval.
Okay, so,
Loan approval, I mean, loan approval is that
Credit,
I
finance,
had
it says
an
finance.
underwriter look at it and they have signed off on it. It's gone through underwriting.
okay, and so I think Logan's saying, what is this minimum, how much can you shorten that? And still keep your buyers.
Because we're competing with cash offers and we have a buyer that's getting financing. How do we the point is make that offer as competitive as we can?
But we don't want to say 7 days if your absolute
It's still
minimum is
getting-
10, right?
Yeah, but I can't, but yes, so, I mean, you're gonna have to, I would say 10 days is the shortest period you can because of the disclosures that you have to do up front with the I mean, I can't do it
She's not
any
even
quicker
gonna
than
be able to get
10
it
days.
any quicker than
I
that.
can't legally.
So that this, also keep in mind, when you're representing the seller, there's a lot of things on these financing contingencies that these buyers get out of. So
There's a
these,
lot of outs. I mean, there
yeah,
are.
these cash offers.
Same
are-
thing with, on timing, I mean, same thing on timing with
And if you have a buyer,
HOA.
if you have a buyer that's absolutely sure they're going to get approved and, you know, they're using their local bank or they're using, for whatever reason, they think that they're just golden, then don't have a financing contingency on that offer. Because if you're competing with cash offers, you're probably not going to get accepted. Okay, so how many loans have you closed with this lender? So if they want to use their own lender and they want to go to Quicken or they want to go to, you know, Loans R Us or what, then how many loans have they closed? Ask them that question. If they haven't closed a loan with that online lender, whoever that is offering that teaser rate, then you need to give them some horror stories as far as what happens. How many of those have you closed? Well, there's a lot that I've seen a lot of buyers just like you that have, it's really attractive and it looks great, but then we get to closing and it doesn't happen. And in this situation, when we've got 5 other offers, I don't want you to get to that point. Not just the disappointment, but the cost of the appraisal, inspection, and everything. So I'm just concerned for you. And if you're not truly concerned for that buyer, and if they don't understand that, and you're not empathetic with them, and you're not trying to get them the best rate and trying to do what's best for them, then your credibility won't go very far. To make sure that you really do, make sure that they're getting the best deal. Make sure that they are working with one of our preferred partners, because there's a lot of experience there. We know it's going to close.
Those are 60-day closes, just so you know.
Quicken
Quicken
and
and
the-
guaranteed rate and things, those are 60-day
Yeah, it's in that
closes.
fine print, the stuff that looks a little fuzzy at the bottom. You can't really
And
read.
when they're quoting a rate, it's based on 20% down and a credit score of a minimum, blah, blah. It
Yeah.
gets smaller and smaller print on there.
Right. How quickly can lender close from date of appraisal is ordered? If your buyer doesn't know that, then you need to get on the phone and find out. Will buyer accept the property as is condition even after the inspection? A good listing agent, they're going to execute a backup offer and they won't allow for repair concessions. Will buyer draft a letter or plea for the property? This is just a personal letter to the seller. These help along with letters from the lender, like Barbara was explaining. Has the Waller Group preferred lender called the listing agent to convey? This is what Barbara was talking about earlier. Yeah. How do you rate your dialogue or relationship with that listing agent? This is something that's real important. And I know as a listing agent that's negotiated a lot on the other side of the table, then how quickly that agent communicates is about 90% of the weight that I put, the credibility I put on that buyer's agent. How quickly are they communicating? So that means your buyer better be communicating really quick as well. So explain that up front before you even start writing offers is real important. Have you asked the listing agent if your offer will be recommended? And have you asked them why or why not? And then, this is something that is happening all the time where that listing agent, they may be with their seller when you're calling them with another offer, or you're about to just look at the property and you want to present an offer on it. They say, oh, we've already accepted an offer. decided on an offer, be strong for your buyer, represent your buyer. Has your seller signed the offer? Have you communicated it to the buyer's agent? I want to make sure your seller is seeing the best offer that's out there. And I'm with my buyer right now, and we are sending you an offer. You'll have it within the next 2 hours and I think you owe it to your seller. Pause, long pause. Yeah. So there may be a long pause on the other end of that phone call. That's real important. This is a huge, it could be a big mistake for that other agent, that listing agent, to not wait and see if you're going to go ahead and fall through 2 hours and have that offer. So these are the things that set an okay agent apart from someone that's going to get an offer accepted. So on verbal acceptance, I'll have this to you by whatever time. Make sure your client understands this is a matter of minutes, not hours. Will your client honor verbal acceptance until we have an executed contract? If I have it to you by whatever time that is. Get that verbal communication, get that commitment from that other agent. Will your client, almost like eyeball to eyeball if possible, will your client honor this if I have this to you in the next 3 hours, for whatever that is? You better make sure you get it done in that time frame, because another good agent is going to slip in and they're going to say, well, have you communicated it? Have you executed it? Has the executed contract been sent? They're going to be asking those. That's what I would be doing, asking those questions. So be strong for your clients. And then, just some of that, are you an employee or an employer? Because good listing agents are employers and buyer agents are employees. So these are just some other things that go, this kind of dovetails the negotiating class training. So make sure you guys have taken that negotiating class training. Okay. Any other closing comments?
Yes, one headshot, and it's redeemable in 30 days, right? Or 30 days. It looks like a full Claudia.
All right. All right. Thank you for your patience today. This is very informative, especially for me. And thank you, Linda, and thank you, Nancy, for lunch.
Okay, great.
And then hopefully-